everyone, and welcome to your weekly market recap. I am Catherine Murray. Well, we are seeing North American equity markets higher on the day, mostly higher, that is. The TSX is up nicely. U.S. markets a little bit more mixed, but interesting to see some nice strength within the small cap space, the Russell 2000, that is. In terms of the TSX, it looks to be showing some nice gains on the week, likely the best performance we've seen in 2 months for the TSX. The S&P 500 is on track for 2% gains, so some nice strength there as well. And the price of crude oil, WTI, is up over 1%, likely on the back of expectations for a greater than expected inventory drawdown next week. So again, it goes back to the supply-demand dynamics, which have really been under pressure, meaning the supply side of the equation has been under significant pressure on the back of the vilification of the energy sector over the past number of years. There's been so little infrastructure and drilling, and that is why we are seeing the price of WTI higher, and also some of the energy stocks really benefiting. I had a great interview with Eric Nuttall, who's a senior portfolio manager over at 9 Point Partners. It will air this Sunday on The Buck Stops here with Catherine Murray. If you have any interest in the energy sector, the energy stocks, it's a half-hour conversation with Eric Nuttall. So hopefully you'll get a lot of information in terms of the sector and perhaps stocks to invest in. A lot of knowledge and information, I think, from the interview. Away from that, just looking at the markets once again here, the big news, of course, in the economy today were the U.S. jobs numbers. They did beat slightly, 187,000 versus 170,000 expected. The unemployment rate did tick higher, but the participation rate also moved higher as well. What does all of that mean taken together? It means that it was a bit of a Goldilocks report, not too hot, not too cold. And that is leading investors to believe that we will have a soft landing in the economy, and that perhaps we have seen the peak in rate hikes from the U.S. Federal Reserve. And that's why the markets are feeling pretty good about it today. We are off the highs of the day, but nonetheless, still there's a bit of a positive momentum to the markets overall. Away from that, we're also looking at Canada's GDP for the second quarter, coming in with a negative 0.2%, versus expectations for a 1.2% gain. So softer here in Canada. That is leading investors to wonder what the Bank of Canada will do next week on September the 6th. Economists believe that there will be no change, no rate hikes. Interestingly, given the fact that obviously it seems that the higher rates have put pressure on the broader economy. Of course, policies also affect the economy. I'll point that out. Interestingly, the BC Premier is actually requesting the BOC not to raise rates. I'm sure many premiers are seeing the effects that that's having, the higher rates, on individuals and their household expenses and the pressure that has put on them. Away from that as well, we've heard the former Bank of Canada Governor David Dodge on BNN Bloomberg also indicating something about rates, basically saying that he does not see rates getting back to the pre-pandemic levels. What does that mean for you if he's right? That we could see higher for longer interest rates, that this is the new norm, these higher levels. Away from that, just a couple stocks to watch. CWB, Canadian Western Bank, came in with better than expected earnings, setting that stock up by 9%. We're also watching Lululemon coming in with a beat on earnings and also raising guidance. They've got to feel very confident about their outlook and also obviously their company specific story. Dollar General, I just want to point out, they reported yesterday some very disappointing earnings and also guided lower. This is important because I always look at the dollar stores as a bit of an indicator in terms of how the consumer is feeling. A number of the analysts, though, are saying that this is somewhat company specific. Nonetheless, something to watch. Stock is down by about 12%. Rounding out just kind of the picture here in terms of how the market's are looking into the back half of 2023. Hard to believe. It looks as though, we had a bit of a very mixed and volatile performance in the month of August, but definitely a bit of a pickup in the last week. And we also, of course, had to incorporate for the first half of the year higher yields. That 10-year yield hit 4.34%. That's the highest we've seen before the financial crisis. We've also, of course, been experiencing a much greater slowdown in China than I think had been anticipated. All of that really weighing on the markets for the first half of the year. And what I mean by weighing, a bit of volatility in terms of the direction of the market. Nonetheless, of course, we certainly have seen some strength, and that was really led by the mega tech companies in the United States contributing about 75% of the S&P 500's performance. So we are seeing some nice moves, though, in the cyclicals and industrials today. We'll see if the markets can really kind of round out the breadth of the market.